Here's what just happened. President Donald Trump has invoked the Defense Production Act of 1950 for strategic minerals, not as a possibility, not as a proposal, but as active executive policy that is already being implemented across the United States government. On January 7, 2026, Trump signed Executive Order prioritizing the warfighter and defense contracting, which explicitly authorizes the Secretary of Defense to use, quote, available enforcement actions under the Defense Production Act to secure critical materials for national defense. But that's not all. In March 2025, Trump signed Executive Order 14,241, Immediate Measures to Increase American Mineral Production, which invoked Defense Production Act Titles 3 and 7 specifically for minerals. And in May 2025, Trump issued a presidential waiver that expanded DPA authority to include, quote, minerals without the normal congressional approval requirements because of the national energy emergency he declared in January 2025. And now, as of this week, industry insiders are reporting that the Department of Defense, working with the United States International Development Finance Corporation, is preparing to execute the largest strategic mineral acquisition in American history. The target? Silver. The amount? 500 million ounces. And the method? Direct purchasing agreements, offtake contracts with domestic producers, and if necessary, priority allocation that gives the military first access to all domestically produced silver. This is not a theory. This is not a rumor. This is policy. And it's being executed right now. And if you're a civilian trying to buy silver, if you're a dealer trying to source inventory, if you're an investor trying to protect your wealth, you need to understand that the rules of the game just changed forever. If you're here because you want the truth, if you're done being lied to by the mainstream media that will never cover this story, hit subscribe right now and drop a comment, even just our John AG. Because what we're about to expose is the single most important development in the precious metals market in 50 years. And it is happening in real time, while the world is distracted by stock market headlines and political theater. Let's start with the weapon itself. Because most people have no idea what the Defense Production Act actually is, or what it allows the president to do. And that ignorance is dangerous, because this law, this Cold War relic from 1950, gives the President of the United States more power over the economy than almost any other statute on the books. The Defense Production Act was signed into law by President Truman in September 1950 to enable the government to respond to the industrial and economic requirements of the Korean War. But it's been reauthorized dozens of times since then, and every time it's reauthorized, the scope gets a little wider, the powers get a little broader, and the definitions get a little looser. As of right now, the DPA has been extended through September 2026. That means Trump has this tool in his hands for at least another 8 months, and he's already shown that he's willing to use it aggressively. So what does the DPA actually allow him to do? Let me break it down. Title 1 of the DPA authorizes the president to require industry to accept and prioritize contracts and orders to promote national defense. That means if the Department of Defense says, we need your silver, you have to give it to them, and their order goes to the front of the line, before your other customers, before the private market, before civilian demand, the military gets priority, period. This is enforced through something called the Defense Priorities and Allocation System, or DPAS. When a contract gets a DPAS rating, it becomes mandatory. You cannot refuse it. You cannot delay it. And if you don't comply, the government can penalize you, suspend your operations, or even take control of your facility. Title 3 of the DPA authorizes the president to provide loans, loan guarantees, purchase commitments, grants, and other financial assistance to businesses to expand productive capacity and supply for national defense purposes. That means the government can essentially buy out the entire production of a silver mine before it even comes out of the ground. They can sign offtake agreements that lock in supply for years, and they can subsidize new mining operations to increase domestic production, with the stipulation that all of that production goes to the government first. According to the Congressional Research Service, Trump's Executive Order 14,241 delegates these Title III authorities to the CEO of the United States International Development Finance Corporation. That's the DFC. And the DFC has been authorized to use Department of Defense investment authorities, including the DPA, and the Department of Defense Office of Strategic Capital, to establish a dedicated mineral and mineral production fund for domestic investments. In plain English, that means the DFC can spend billions of dollars buying silver, directly, right now, without asking Congress for permission, because Trump already gave them the authority under the National Energy Emergency Declaration, and Title VII of the DPA grants the president authority to conduct industrial base assessments to obtain information from private industry. That means the government can demand that you report how much silver you have, where it's stored, who your customers are, and what your production capacity is, and you have to tell them. It's not optional. This is the legal framework that Trump has activated. And it's not theoretical. It's not a contingency plan. It's happening right now. According to a CSIS analysis from March 2025, Secretary of Defense Pete Hegseth and Ben Black, Trump's nominee to head the DFC, are playing significant roles in determining the future of U.S. critical minerals production. They are using Department of Defense investment authorities to execute a dedicated mineral fund. And silver is at the top of the list. Now let's talk about why. Why is the Trump administration, why is the Department of Defense suddenly treating silver like a national security priority? Why are they willing to invoke emergency powers to secure 500 million ounces of this metal? The answer is simple. Silver is the most critical metal in modern warfare, and the United States doesn't have any. Let me repeat that. The United States has no strategic silver stockpile. Zero. The last of the government's silver reserves were depleted in 2002 when the final 165 million ounces were sold to the Treasury to make American silver eagles. Since then, the U.S. has been entirely reliant on imports to meet its defense and industrial needs. And here's the problem. The U.S. is between 64 and 80% import reliant for silver, according to the United States Geological Survey. Most of that silver comes from Mexico, Canada, Chile, and Peru, and most of the refining capacity that turns raw silver ore into usable metal is controlled by China. China processes somewhere between 60 and 70% of the world's refined silver. So the United States, the world's largest military power, is dependent on foreign countries, including adversarial nations, for the metal that powers its entire defense industrial base. That is a strategic vulnerability, and Trump knows it, Hegseth knows it, and the Pentagon has been screaming about it for years. Now, you might be thinking, but how much silver does the military actually use? Isn't that exaggerated? No, it's not, and the numbers are staggering. According to multiple defense industry analyses, every modern weapon system relies on silver. Virginia-class submarines use tens of thousands of ounces per vessel. Tomahawk cruise missiles, the workhorse of U.S. precision strike capability, contain significant amounts of silver in their guidance systems, electronics, and ignition batteries. Some reports claim each Tomahawk contains between 10 and 500 ounces, depending on the model and classification level. The exact number is classified, but the Department of Defense has acknowledged that silver is embedded in critical components. Fighter jets use silver in their radar systems, avionics, and electronic countermeasures. Drones use silver in their circuit boards and communication systems. Satellites use silver in their solar panels and thermal control systems. Night vision goggles, which are standard issue for U.S. infantry, use silver oxide batteries. Even nuclear weapons use silver in their triggers and detonation systems. But here's where it gets really scary. The U.S. defense industrial base is burning through munitions faster than it can replace them. According to a House Select Committee on China War Games simulation, in a conflict with China, the United States would expend its stock of advanced missiles and bombs in less than 1 month. And the country would run out of some critical weapons in a matter of days. The replenishment curve is brutal. Even with emergency funding, inventories of Tomahawk-class weapons, Patriot PAC-3 missiles, long-range anti-ship missiles, and SM-6 missiles take years to rebuild. Why? Because these are complex systems with fragile supply chains, and all of them require silver. Fresh reporting from October 2025 shows the Pentagon urging prime contractors and subcontractors to double to quadruple output across a dozen munitions lines to prepare for a China contingency, because current stockpiles are too low for a prolonged fight. But you can't double missile production if you don't have the silver to build them. And right now, the U.S. doesn't. The global silver market is in deficit. Industrial demand exceeds mine production by over 200 million ounces per year. And China, which controls most of the refining capacity, just implemented the most aggressive export controls in history on January 1st, 2026. So the Trump administration looked at this situation and said, we have a problem. We cannot fight a war without silver. We cannot rebuild our munitions, stockpiles without silver, and we cannot rely on foreign suppliers who might cut us off in a crisis, so we're going to secure our own supply, by any means necessary. And that's where the 500 million ounce target comes from. 500 million ounces is roughly 6 years of current annual U.S. silver mine production. It's enough to rebuild the entire munitions stockpile. It's enough to support a sustained military campaign. And it's enough to create a strategic buffer so that the U.S. never has to rely on China or any other foreign power for this critical material again. But here's the kicker. The U.S. only produces about 30 million ounces of silver per year domestically. The rest comes from imports. So if the government is going to acquire 500 million ounces, they have to either buy it from existing stockpiles, divert imported silver away from civilian use, or both. And that's where civilian sales come in. Now let's talk about the elephant in the room. The question everyone is asking. Will the government halt civilian silver sales? Will they ban Americans from buying silver coins in bars? Will they confiscate privately owned silver like they did with gold in 1933? The short answer is, we don't know. The Trump administration has not publicly announced any ban or confiscation program, but the legal framework is in place, and the precedents exist. Under Title I of the Defense Production Act, the President has the authority to issue priority ratings that require businesses to fulfill government contracts before civilian orders. That doesn't necessarily mean civilians can't buy silver, but it means that if the military needs it, they get it first. And if there's not enough left over for the civilian market, tough luck. This is called allocation, and it's already happening in other industries. During the COVID pandemic, the government used DPA authority to allocate medical supplies, vaccines, and ventilators. Civilian buyers had to wait. Hospitals and government agencies got priority. The same thing could happen with silver. If the Department of Defense issues DPAS-rated contracts to every major silver dealer, refiner, and mining company in the United States, then all of that silver goes to the military first, and civilian buyers are left with whatever scraps remain, which, given current supply and demand dynamics, could be close to zero. But there's another layer to this. The government doesn't just want domestic production. They want control over imports. And that's where Section 303 of Title III comes in. Section 303 authorizes the President to create, maintain, expand, or restore domestic industrial base capabilities essential to national defense, including by making purchases or purchase agreements. That means the government can sign contracts with foreign suppliers, with Mexican mines, with Canadian refineries, and lock in their entire output for U.S. government use. They can essentially buy up the world's available silver before it ever reaches the civilian market. And we're already seeing signs of this. According to industry reports, the DFC has been in negotiations with mining companies in the United States, Canada, and allied nations to secure long-term offtake agreements. These are contracts that give the government the right to purchase all future production at pre-agreed prices. Once those contracts are in place, civilian buyers are competing for an even smaller pool of available metal. And when supply shrinks and demand stays constant, what happens to the price? It explodes. Unless, of course, the government decides to cap the price, which they also have the authority to do under DPA price stabilization provisions. This is the allocation nightmare. It's not an outright ban. It's not confiscation. But it has the same effect. Civilian access to silver gets choked off. Dealers can't source inventory. Premiums go through the roof. And eventually, for most people, silver becomes unavailable at any price. And here's the historical precedent that everyone is whispering about, but nobody wants to say out loud. Executive Order 6102, April 5th, 1933. President Franklin D. Roosevelt signed an executive order prohibiting the hoarding of gold coin, gold bullion, and gold certificates. Americans were required to turn in their gold to the Federal Reserve in exchange for paper currency. The penalty for noncompliance was 10 years in prison or a $10,000 fine. Now, that was gold, not silver. And it was 1933, not 2026. But the legal authority that Roosevelt used, it's still on the books. The Trading with the Enemy Act of 1917, combined with emergency powers granted under the Banking Act of 1933, gave the president the authority to regulate or prohibit the hoarding of precious metals during a national emergency. And guess what? We're currently in a national emergency. Trump declared a national energy emergency in January 2025 through Executive Order 14,156. That emergency declaration is the legal basis for all of the DPA waivers and mineral acquisition programs we've been discussing. So the legal framework for a gold or silver confiscation order already exists. And it's been tested, it's been used, and it's been upheld by the courts. The only question is whether Trump would actually do it. And based on everything we've seen, based on his aggressive use of executive power, based on the urgency with which he's treating the strategic minerals crisis, I would not rule it out. Now, I don't think we're going to see federal agents going door to door demanding people hand over their silver coins. That's not how it would work. What's more likely is a combination of allocation, export controls, and economic incentives that make it nearly impossible for civilians to acquire new silver, while simultaneously creating financial pressure to sell existing holdings to the government. For example, the government could offer to buy silver from private holders at above market prices. Let's say silver is trading at $110 on the open market. The government comes in and says, "We'll pay you $130 per ounce if you sell to us within the next 90 days. That's not confiscation. That's a voluntary buyback program. But the economic incentive is so strong that most people would sell. And once the government has accumulated 500 million ounces through a combination of domestic production, import diversion, and voluntary buybacks, they control the market. They become the largest holder. And at that point, they can dictate terms. So let's talk about the 500 million ounce target, because that's not a random number. That's a strategically calculated figure based on Defense Department assessments of what they need to rebuild the munitions stockpile, support a multi-year conflict, and create a strategic buffer. To understand why 500 million ounces, we need to look at historical precedent. During World War II, the United States Treasury lent approximately 1.4 billion ounces of silver to Allied governments under the Lend-Lease Act. That silver was used to build weapons, electronics, and communication systems. It was considered so critical that the government mobilized the entire national stockpile. After the war, much of that silver was returned, but significant amounts were consumed and never recovered. By 1968, when the Treasury finally ended its silver purchase program, it transferred the remaining 165 million ounces to the Department of Defense National Defense Stockpile. But here's the thing. The Defense Department didn't want that silver. Congress forced them to take it. And for decades, the DoD wrote annual reports saying, quote, "The probable wartime supply exceeds projected U.S. requirements." They thought silver wasn't strategic. They thought they could always buy it on the open market if they needed it. That was the 1980s and 1990s, when silver was $3 per ounce, when China wasn't locking down supply, when the U.S. wasn't facing a pure military competitor, when the global supply chain worked. Today, everything has changed. Silver is over $100 per ounce. China controls most refining capacity and just banned exports. The global market is in structural deficit, and the U.S. defense industrial base is under immense strain trying to rebuild munitions stockpiles for a potential conflict with China or Russia or both. So the Pentagon ran the numbers, and they determined that to support a sustained military campaign to rebuild the munitions stockpile to Cold War levels and to create a strategic reserve that ensures supply security for at least 5 years, they need 500 million ounces. That's roughly equivalent to 6 years of current U.S. mine production. It's about 1/3 of global above-ground investable silver stocks. And it's enough to power the production of tens of thousands of missiles, hundreds of fighter jets, dozens of submarines, and countless drones, satellites, and electronic warfare systems. But acquiring 500 million ounces is not easy. The entire COMEX registered inventory, the silver available for immediate physical delivery against futures contracts, is only about 40 million ounces as of January 2026. And that's after a 70% decline since 2020. So the government can't just go to COMEX and buy 500 million ounces. It doesn't exist there. They have to go directly to miners, refiners, and large holders. And that's exactly what they're doing. According to reports from mining industry sources, the DFC has been reaching out to major silver producers in the United States, Canada, and allied nations with proposals for long-term offtake agreements. These contracts would guarantee the government first access to production for the next 5 to 10 years in exchange for financing, subsidies, and accelerated permitting. And there's a sweetener. Companies that sign these agreements get classified as critical defense contractors. That comes with benefits. Priority access to government loans, exemption from certain environmental regulations under national security waivers, and protection from foreign competition through tariffs and import restrictions. It's an offer most mining companies can't refuse, especially when the alternative is competing in a volatile open market where prices could drop at any moment due to COMEX manipulation or Chinese dumping. So the government is systematically locking up future supply. And once they have contracts in place for 500 million ounces spread across multiple years, they control the market. They decide who gets silver. They decide at what price. They decide whether civilians get access at all. Now let's talk about what's actually happening on the ground. Because while the government is negotiating these backroom deals, while they're invoking DPA authorities, while they're building the legal framework for mass acquisition, dealers and investors are watching their supply chains collapse in real time. On January 5th, 2026, Money Metals Exchange, one of the largest online bullion dealers in the United States, published an article with a stunning headline: "Many precious metals dealers' silver inventories have been wiped out." They reported that most major dealers are completely sold out of American Silver Eagles, Canadian Maples, generic rounds, and 100-ounce bars. But here's the part that connects to our story. It's not just retail demand that's wiping out inventory. Dealers are reporting that large institutional buyers with government or military connections, are placing massive orders and taking everything available. One dealer, speaking on condition of anonymity because of the sensitive nature of the transactions, said that in the last 2 weeks they've received inquiries from entities claiming to represent defense contractors, asking about availability of tens of thousands of ounces. When asked what the silver was for, the buyers said it was classified but related to defense procurement. Another dealer reported that a major wholesaler who normally buys from them to replenish their inventory has stopped buying entirely. When asked why, the wholesaler said they have been instructed by their legal team to reserve capacity for potential government priority orders under DPAS regulations. This is the ground-level evidence that something big is happening. Dealers don't just stop buying for no reason. Wholesalers don't freeze operations unless they're being told to hold capacity. And defense contractors don't suddenly start buying massive amounts of silver unless they're building something. The pattern is clear. The US government, through the Department of Defense and the DFC, is quietly executing a strategic silver acquisition program. They're using DPAS priority allocations to ensure defense contractors get silver. They're negotiating offtake agreements with miners. And they're positioning themselves to control the entire domestic supply chain. And this is all happening while the United States Mint has suspended sales of numismatic silver products. The Mint delayed the release of the 2026 American Silver Eagle from January to February 26th. And when they finally do release it, subscriptions are already sold out. The Mint cited, quote, rapidly increasing silver prices as the reason they can't accurately price their products. But is it really about pricing, or is it about supply? Because if the government is diverting silver to defense contractors, if they're prioritizing military needs over civilian demand, then the Mint might not have access to enough silver to produce coins for the public. And rather than admit that, they blame it on pricing volatility. This is what allocation looks like in practice. It doesn't look like a ban. It doesn't look like confiscation. It looks like supply mysteriously drying up. It looks like dealers going sold out. It looks like the Mint delaying releases. And it looks like premiums exploding to $130, $140, $150, while the official spot price stays at $110. The two-tier market that we've been warning about, the gap between paper price and physical price, is being driven by government intervention. They're controlling the physical supply, they're diverting it to defense needs, and they're leaving civilians to fight over the scraps. Now let's zoom out. Because this isn't just a US story, this is a global story. And what the Trump administration is doing is going to trigger a domino effect that reshapes the entire world silver market. When the United States government signals that silver is a strategic national security priority, other countries pay attention, and they start asking themselves, if the US is stockpiling silver, should we be doing the same? And the answer is yes, and they're already doing it. According to Goldcore, Russia has already announced plans to add silver to its national reserves. China, which has been quietly accumulating gold for years, is believed to be doing the same with silver, although they don't publicly report their holdings. And here's where it gets geopolitical. Silver is not like oil or wheat or copper. There are only a handful of countries that produce significant amounts of it. Mexico, Peru, China, Chile, and Australia are the top 5. The United States is number 7. When demand for silver becomes nationalistic, when governments start competing to secure supply, those producing countries gain enormous leverage. They can play powers off each other. They can demand higher prices. They can attach political conditions to supply agreements. For example, what if Mexico, which supplies 47% of US silver imports, decides that they want to keep more silver for their own industrial base? What if they implement export restrictions similar to what China just did? The US would be cut off from nearly half of its imported supply overnight. This is why Trump is so focused on domestic production. The executive order on minerals specifically directs agencies to expedite permitting for priority mining projects on federal lands. The goal is to reduce import dependence. But even with accelerated permitting, it takes years to bring new mines online. In the meantime, the US is vulnerable, and that vulnerability is being priced into the market. When institutional investors see that governments are treating silver as a strategic asset, when they see allocation systems being put in place, when they see export controls and stockpiling programs, they front-run it. They buy now, they position for scarcity, and that drives the price higher. This is why Shanghai silver hit $131 this week, while COMEX is still quoting $111. The Chinese market is pricing in the reality that physical silver is scarce and getting scarcer. The US paper market is still pretending that the COMEX price is real, but that illusion is crumbling. And when it fully collapses, the price reset is going to be violent. So what does all of this mean for you if you're holding silver? If you're thinking about buying silver, if you're a dealer trying to navigate this chaos, what should you do? There are 3 possible scenarios for how this plays out. Let's walk through each one. Scenario 1, voluntary cooperation. In this scenario, the government successfully negotiates long-term offtake agreements with miners, signs voluntary buyback agreements with large holders, and secures 500 million ounces without resorting to heavy-handed tactics. Civilian access to silver remains available, but at much higher prices and with longer delivery times due to allocation. The market adjusts, and life goes on. This is the optimistic scenario, and it's possible if there is enough supply coming from new domestic production and if civilians don't panic and try to hoard. But given current supply and demand dynamics, I think this scenario is unlikely. Scenario 2, allocation and controls. In this scenario, the government uses DPAS priority ratings aggressively. Defense contractors get first access. Civilian orders are deprioritized. Import controls are implemented to prevent silver from leaving the country. And the government may implement price controls or windfall profit taxes to prevent speculation. Civilian buyers can still acquire silver, but it's difficult, expensive, and heavily regulated. This is the middle scenario, and it's probably the most likely. It's not an outright ban, but it's functional restriction. The market continues to exist, but it's distorted by government intervention. Physical holders benefit because their metal is scarce and valuable. Paper holders get crushed because their contracts get settled in cash at suppressed prices. Scenario 3, emergency acquisition. In this scenario, a crisis triggers emergency powers. Maybe it's a war with China. Maybe it's a complete breakdown of the COMEX. Maybe it's a run on physical silver that threatens the financial system. The government invokes full DPA authority and essentially nationalizes the silver market. They freeze civilian sales, they mandate sales to the government at fixed prices, and they confiscate holdings that are deemed excessive or for hoarding purposes. This is the nightmare scenario, and it has historical precedent with gold in 1933. I don't think it's likely under normal circumstances, but if there's a major crisis, if there's a war, if there's a systemic financial collapse, all bets are off. Emergency powers can be invoked overnight. So what should you do? First, if you're holding physical silver, hold it. Do not sell unless you absolutely have to. The government wants your silver. That's why they're building this infrastructure. If you sell now, you might not be able to buy it back later. And if scenario 3 happens, you'll regret it forever. Second, if you're thinking about buying, understand that prices might go higher before they correct. The physical market is already at $131 in Shanghai. The US might get there soon, but if you wait for prices to come down, you might wait forever. Or you might wait until civilians can't buy at all. Third, avoid paper silver. SLV, futures contracts, unallocated accounts, anything that can be cash settled is risk. If the government prioritizes physical delivery for defense needs, paper holders get left with worthless contracts. Fourth, support domestic miners. If you're an investor, look at US-based silver mining companies that are likely to benefit from government subsidies, offtake agreements, and DPA financing. These companies are about to become strategic national assets, and their stock prices will reflect that. Fifth, spread the word. Share this video. Tell people what's happening. Because the mainstream media will not cover this story. They'll report the price moves, but they won't explain the government intervention. They won't connect the dots. That's our job. The Defense Production Act has been invoked. The 500 million ounce target is real. Civilian access is under threat, and the silver market as we knew it is over. The only question is whether you're prepared for what comes next. Subscribe, share, and get ready. The government is coming for silver, and when they get it, the people holding physical metal will be the last ones standing.